Hello everyone, welcome to TechMind Investing, where logic meets the market. In the long-term narrative of the technology industry, few companies have staked the future as completely as Tesla. Starting from electric vehicles, Tesla has extended into energy storage, autonomous driving, artificial intelligence, and robotics. If we had to pick a point in time to measure whether this company has truly transcended the framework of an automobile manufacturer, then the year 2026 is likely that watershed moment. In that year, Tesla's two most important growth trajectories will face the market's scrutiny simultaneously for the first time. The first is the autonomous taxi, known as Robotaxi. The second is the humanoid robot, Optimus. If either of these directions succeeds, Tesla's business model will be completely rewritten. Tesla's plan for Robotaxi is not a new story, but over the past several years, the market has questioned not the vision, but the timing of implementation. Entering the year 2026, this question becomes concrete. As of 2025, Tesla's global fleet has exceeded 6 million vehicles, a critical figure. This means Tesla possesses the largest real-world driving data source in the world. The actual driving data generated daily amounts to tens of billions of kilometers, which are directly used to train Tesla's own autonomous driving neural networks. Unlike traditional autonomous driving companies that rely on high-definition maps and limited scenarios, Tesla has chosen a purely vision-based end-to-end neural network approach. This path is extremely difficult, but once established, the expansion speed will surpass any competitor. It does not require mapping each city individually and can scale simply through software upgrades. According to data disclosed by Tesla in multiple technical presentations, the latest version of its full self-driving system has improved the average human intervention distance by several times compared with earlier versions in specific urban environments. This indicates that the system is approaching human-level safety in real-world conditions. The critical aspect of 2026 lies in whether regulatory and liability frameworks can keep pace with technological maturity. Once Tesla obtains legal approval to operate fully autonomous taxis in 1 or 2 jurisdictions, even deploying only tens of thousands of vehicles will fundamentally change market perception of Tesla's valuation. Using the most conservative model, if one robotaxi can generate $30,000 in annual operating profit, 100,000 vehicles would produce $3 billion in high-margin service revenue. And this is only the beginning, because the marginal cost of the software platform is nearly zero. This is why the year 2026 is not just a year of technological validation for Tesla, but a turning point for its business model. If Robotaxi transforms the mobility industry, then Optimus has the potential to impact the entire labor market. Tesla first demonstrated Optimus in 2024, showing it could perform basic carrying, sorting, and simple operational tasks. By 2025, prototypes were already executing repetitive operations in Tesla's own factories. Many investors have underestimated this progress, but it is a critical signal. The reason is simple. Factories are the ideal first application for humanoid robots. The environment is structured, tasks are repeatable, and returns are measurable. If one robot can replace a worker with an annual salary of $50,000, even at a price of $20,000 to $30,000, it represents significant economic value. Tesla's advantage is that it is not simply a robotics company. It simultaneously controls motors, batteries, sensors, vision systems, and AI inference chips. This allows Optimus to directly leverage the technology stack used in autonomous driving rather than starting from scratch. According to Tesla's internal estimates, once production reaches 1 million units per year, the unit cost of humanoid robots will decline rapidly. This figure may sound aggressive, but for a company producing several million vehicles annually, the supply chain is not the biggest obstacle. The real challenge lies in software maturity and safety validation. This is where breakthroughs may occur in 2026. Once Optimus can reliably complete factory tasks, the next steps will include warehousing, logistics, retail backend, and even household assistance. Market research institutions generally estimate that the potential global market for humanoid robots could reach trillions of dollars in the long term. Even capturing just 10% of this market would value Tesla far beyond traditional automobile companies. The importance of 2026 is not whether all plans are fully realized, but that in this year, Tesla will prove to the world for the first time that its core capability is not just making cars, but turning artificial intelligence into real-world productivity. If Robotaxi succeeds, it means the software platform begins to generate continuous cash flow. If Optimus is implemented, it means physical AI begins to replace human labor. Once these two trajectories succeed simultaneously, Tesla's business model will combine the scalability of a tech company with the operational capability of an industrial company. Therefore, 2026 is not an endpoint, but a threshold. Cross it, and Tesla enters an entirely new industrial dimension. Fail to cross it, and it remains an excellent electric vehicle company. So here is the question. From today's standpoint, which do you think Tesla will actually implement first in 2026, the autonomous taxi or the humanoid robot? If only one of these two paths can succeed, which do you think will have a greater impact on Tesla's long-term valuation? Leave a comment. I'd love to hear your thoughts. And if you enjoy this kind of deep analysis, feel free to subscribe and like the video. Your support helps us bring more high-quality investing content here on TechMine Investing.